Berkshire Hathaway, one of its Class A shares will cost you about $470,000. Now, I know it owns a railroad, it owns Geico, it makes a bunch of investments, and has a ton of money. But where does this money actually come from? What are its operating businesses? I see the line items on its financial statements: insurance, railroad, sales and services, leasing, but those are fairly vague, so I wanted to dive in to see exactly what are the companies making all this money and which of them make the most money. Alrighty, starting off with insurance and other. So Berkshire breaks its insurance business down into two categories: underwriting and investing. For underwriting, they have three primary operating businesses. They have Geico, which is a leading auto insurer in the US, Berkshire Hathaway Primary Group, which has a number of subsidiaries and offers commercial insurance such as workers' comp and credit insurance. Then they have Berkshire Hathaway Reinsurance Group. Reinsurance is where one insurer transfers portions of their risk to another insurer. That way they can reduce the likelihood of paying out a large obligation as a result of some insurance claim. Berkshire has a massive reinsurance group and it's an international operation. So Berkshire's insurance customers pay them a premium every month or year, and that's recorded as their premiums earned. Now the second category of their insurance business is the investing. Now most people who are insured don't file a claim right away, and so those premiums build up to something called the float. The float can be invested to earn income via interest, dividends, and or appreciation. Now as we can see, the vast majority of their insurance investment income from the last quarter was dividend income. This dividend income comes from a big portfolio of equities, but they also hold a substantial number of cash and T-bills, as well as fixed maturity securities such as domestic government bonds, foreign government bonds, and corporate bonds. Okay, moving on in the insurance and other category, we've got leasing revenues. So Berkshire notes that it leases out rail cars, aircraft, over-the-road trailers, intermodal tank containers, cranes, storage units, and furniture. Two of these leasing businesses that Berkshire talks about in its report are Extra and Marmon. Extra Lease is the leading provider of over-the-road trailers for rent and lease in the US. The company has a fleet of about 90,000 trailers, and this includes flatbeds, storage trailers, chassis, and dry vans. The second leasing business is Marmon. Really, it does it through a few of its subsidiaries. Through Procore, it leases railroad tank cars and freight cars, and through Exif, it leases intermodal tank containers for the distribution and storage of bulk liquids, chemicals, and gases. Now on to sales and services, which is a bit of a catch-all category. First up, we have manufacturing, and this gets broken down into three categories: industrial products, building products, and consumer products. One of its industrial products businesses is Marmon, which we just talked about. In addition to leasing rail cars, it also has a manufacturing and service business. Berkshire also owns Precision Cast Parts Corp., which makes metal products for the aerospace, power, and general industrial markets. They also own specialty chemical maker Lubrizol, as well as IMC, International Metalworking Companies, which manufactures metal cutting tools and systems. For building products, Berkshire owns Clayton Homes, which manufactures manufactured and site-built homes, Shaw, which is a flooring company, Johns Manville, which does insulation, roofing, and engineered products, Acme Building Brands, which is bricks and masonry, Benjamin Moore, which is the paint and coatings company, and MyTech, which does residential and commercial construction and engineering products. Now for consumer products, they own Forest River, a recreational vehicle manufacturer, several apparel and footwear operations such as Fruit of the Loom and Brooks Sports. They also own Duracell, the battery company, and a custom picture framing business called Larson Jewell. Now for services, the company owns NetJets, which offers shared ownership programs for general aviation, Flight Safety, which offers high technology training products and services to operators of aircraft. They own TTI, which is a distributor of electronic components. They also have Dairy Queen, as well as a truck leasing company we talked about before, Extra. They have a furniture business in this category, and they also have Charter Brokerage, which offers third-party logistics services primarily to the petroleum and chemical industries. They have Business Wire, which distributes electronic news, multimedia, and regulatory filings. And then finally, they have WPLG, which is a TV station in Miami, Florida. Berkshire's largest retail business is Berkshire Hathaway Automotive, which consists of over 80 auto dealerships that sell new and pre-owned automobiles. The company also offers parts, services, and insurance. They've got 4 home furnishing businesses: Nebraska Furniture Mart, RC Wiley, Star Furniture, and Jordan's. These sell furniture, appliances, and electronics. They have 3 jewelry retailing businesses: Borsheims, Helzberg, and Ben Ridge. They have the famous See's Candy, Pampered Chef, which offers high-quality kitchen tools, Oriental Trading Company, which does party supplies, school supplies, toys, and novelties. Then they have a motorcycle accessory retailer in Germany. Last up in this category is McLane Company. McLane operates a wholesale distribution business that provides grocery and non-food consumer products to retailers and convenience stores, as well as restaurants. You've probably seen their trucks driving around. I know I have. McLane also operates in businesses that are wholesale distributors of various distilled spirits, wine, and beer. They have large customers such as Walmart, 7-Eleven, and Yum Brands. So now their investment income comes from gains on public stocks, as well as gains on derivative contracts such as options and futures, as well as interest income and dividends. When I was talking earlier about the investments, I mentioned that they have equity investments as well as fixed income investments. And I'm not going to go through the whole equity portfolio. You can do that online. CNBC has a portfolio tracker. Their new 13F also just came out. But I did want to talk about one important thing that when you look through the reports, you'll notice, and that's the equity method. Now, the equity method requires the investing company, in this case Berkshire, to record the investees' profits or losses in proportion to the percentage of their ownership. Berkshire does this with a number of their investments, the biggest being Kraft Heinz. Other companies it does this with is Occidental Petroleum, which over the past few years it's built up a sizable stake in, as well as BRK-A Commercial Mortgage, which it owns 50% of, with Jefferies Financial Group owning the other 50%. BRK-A provides capital solutions, investment sales advisory, and mortgage servicing for multifamily and commercial real estate. They also use the equity method for their 38% interest in Pilot. Pilot operates travel centers in North America, and they have 800 retail locations across 44 US states and 6 Canadian provinces. They actually have an agreement to acquire an additional 41% of Pilot in the first quarter, and this will make them the majority owner of Pilot. Two other companies that it does the equity method with, but it has a 50% non-controlling interest in, is ETT, which is an owner and operator of electric transmission assets in Texas, as well as Iroquois, which operates natural gas pipelines in New York and Connecticut. Okay, that wraps it up for our insurance and others. Now let's get on to rail, utilities, and energy. So their railroad business is BNSF, which operates one of the largest railroad systems in North America. They have over 32,500 route miles in 28 states and 5 Canadian provinces. They move consumer products, industrial products, agricultural products, and coal. For utilities and energy, Berkshire owns 92% of Berkshire Hathaway Energy Company, which is a global energy business. Its domestic regulated utility interests include Pacific Corp, Mid-American Energy, and NV Energy. Pacific Corp is an electric utility operator in western states including Utah, Oregon, and Wyoming. MEC operates electric and natural gas utilities primarily in Iowa and Illinois, and NV Energy operates electric and natural gas utilities in Nevada. Their pipeline business consists of 5 domestic regulated interstate natural gas pipeline systems, as well as a 25% interest in a liquefied natural gas export, import, and storage facility. Berkshire Hathaway Energy, GT&S, operates 5,500 miles of pipeline. The company also owns Kern River Gas Transmission Company, which operates a 1,700-mile-long pipeline in California, Nevada, Utah, and Wyoming. Other energy businesses include a regulated electricity transmission-only business in Alberta, Canada, called AltaLink, and they also have a diversified portfolio of mostly renewable independent power projects and investments in 10 states. In addition to these energy and utilities businesses, Berkshire Hathaway Energy also operates a residential real estate brokerage business and a large network of residential real estate brokerage franchises in the United States. So which of these businesses makes the most money for Berkshire? So we can see for the third quarter that their biggest segment was the sales and services revenue. And we can break that down a little more and see that a little less than half of that was manufacturing and a little more than half of that was the service and retailing. The industrial products and the building products account for the majority of the manufacturing revenue, and we can see that McLane accounted for most of the service and retailing revenue. For railroad, utilities, and energy, we can see that the railroad revenues and the energy operating revenues were about the same. For insurance, we can see that Geico earned about the same as the primary group and the reinsurance group's revenue combined. Now, as far as profits go, we can see that if it wasn't for the investments, the insurance business would have lost money as a whole, and we can see that McLane operates on very low margins and that the manufacturing business made the most amount of profit. That's it for this video. Thanks for tuning in, and I hope you guys took something from it. If you have any questions, feel free to leave a comment. Be sure to subscribe so you know when I post my next video. Have a great rest of your day.